Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Yesterday, US indices saw a strong performance. However, the brakes were slightly put on amid fears of another bomb threat, causing the Netherlands-Germany football match to be cancelled. The current terror threats are causing for difficult trading conditions, and as seen yesterday, for indices to rein back on daily gains. The US 500 ended flat yesterday, closing on 2,051.65. The US Tech 100 added 6 points to close on 4,565. And the Wall Street added 30 points to close on 17,487. Today, the Federal Reserve will release minutes from the Federal Open Market Committee's October 27th to 28th meeting at 2 p.m. today in Washington. These could be among the highlights: December rate hike decisions. Pay attention also for discussions on how officials will communicate the pace of rate increase following liftoff. This will dominate the debate once they've made the first move, and Fed speakers have repeatedly emphasized that they'll take a gradual approach. Everybody, hawks and doves, is trying to turn the market focus less on the timing of liftoff and more on the pace that's going to follow liftoff. Global risk is another topic. In the Fed's September statement, officials warned that recent global economic and financial developments may restrain economic activity somewhat and are likely to put further downward pressure on inflation in the near term. The addition came amid concerns that the Chinese economy was slowing and as the market gyrated in response to the Chinese government's August currency devaluation. The sentence was dropped from the October statement. Remarks by Fed officials since the October meeting show policymakers continue to feel sanguine about global risks and optimistic about incoming domestic data. Add that to a strong October payrolls report, and the signs suggest policymakers are forming consensus around a December rate increase, Sweet has said. This statement, however, was remarked prior to any of the ongoing global crises. Looking into commodities, gold dropped $14 yesterday to close on 1,069.5, and Brent crude lost 82 cents to close at $43.98 a barrel. In Europe, the Germany 30 continued to climb, adding 90 points to close on 10,896, while the UK 100 added only 44 points. Staying with a UK corporate, Barclays is set to pay at least another $100 million to resolve allegations it abused foreign exchange markets through its electronic trading platform by next month, presenting an early test for the bank's incoming chief, Jess Stately. The New York Department of Financial Services is likely to impose a smaller penalty for the alleged electronic trading abuses than the $485 million the bank agreed to pay New York's banking regulator in May over manipulation of forex spot trading, people familiar with the case have said. The looming penalty comes as US agencies' far-reaching forex probe also pursues fresh claims against Deutsche Bank. Moody's rating agency calculated this week the bank's litigation costs since 2008 financial crisis have reached almost $219 billion, with the bulk of the burden shouldered by US banks, led by Bank of America with provisions of about $70 billion. The pain is now shifting to their European counterparts, Moody's have said. We think that more is still to come, said David Fanger, Senior Vice President, who pointed to Deutsche Bank and RBS as being particularly exposed to foreign exchange and US mortgage litigation costs, respectively. At this point, probably European banks are more vulnerable because US banks have already taken more of the provisions. In today's economic data in focus, at 10 a.m., the EU construction output for September is released. At 12 a.m. in US, MBA mortgage applications are released. At 1 o'clock, Fed's Lockhart will speak, and at 7 o'clock this evening, the US FOMC minutes will be released. That's all for this morning's market update. Thank you, and goodbye.